Welcome back to another episode of Stock Talk. If you guys are new to my channel, welcome. My name is Julie. In today's video, I want to go over some stocks that I'm going to be closely watching for Monday, February 28th as they are reporting earnings. The first stock I want to talk to you guys about is Zoom. Now, Zoom was first incorporated in 2011 and IPO'd in April of 2019. It had an IPO price of $36, but quickly ran all the way to $104, but then closed around $60 by the end of 2019. Now, when the pandemic hit, though, this is one of the stocks that actually greatly benefited from the pandemic. It had an all-time high of $588 back in November of 2020, but has since come down, and it's currently trading at around $125. But what's interesting is looking at the previous earnings report, since it's gone public, it hasn't missed one of their earnings. So I'm really curious to see how Zoom is going to be doing on Monday when they report earnings. And if we take a look at the chart, we can see that Zoom is currently in very oversold territory. And Zoom still has a moderate buy rating. It has 7 buy, 4 hold, and 1 sell rating. And the average price target is still over $200 at $207, which represents a 65% upside potential from where we're sitting right now. So if you guys are looking to pick up some shares of companies that are trading cheaply, then Zoom could be one of them. Even though, yes, I know it was one of the pandemic darlings, and I don't foresee the stock going back to $588 anytime soon. I think in the long term, this is a great company that could see potential growth. If anything, it has shown how business can be done regardless of the pandemic. But let's see on Monday when it reports earnings and see how it does. Now, the next stock on my list is Lucid, and Lucid is an EV company. Now, Lucid just recently went public and had an all-time high of $64 and is currently trading at around $26. Now, I've been in Lucid in and out several times, and right now I find the price very attractive, and they're also reporting earnings on Monday. Now, Lucid is a company that is not going to make me rich overnight. It's rather a long-term hold. But at this price point, I find Lucid very attractive. And as a matter of fact, I would consider selling puts on Lucid to get the stock even cheaper. And for example, I would be interested in going out to May of 2022 and taking a look at the strike prices. I can see that the $20 strike price has a lot of volume. So I would actually be interested in selling puts for the $20 strike and would collect a premium of $215. Now, if Lucid trades below $20 at the time of expiration, then I would actually now own 100 shares of Lucid, and my break-even price would be roughly $17.85. So I would be very happy with that, and I would just sell covered calls against my shares. And they are also reporting their earnings on Monday, so I'd be interested to see how those pan out. Now, the next stock on my list is Workday, and Workday is a software application that provides enterprise cloud applications worldwide. Its application helps customers to manage critical business functions and optimize their financial and human resources. The company offers a suite of financial management applications which enable chief financial officers to maintain accounting information in the general ledger. The company was founded in July of 2005 and has its headquarters in Pleasanton, California. Now, currently, I like this stock anyways because it's sitting on the 200-day moving average on my 3-year chart, which if we were to draw the line, we can see that this is actually where it was trading prior to the pandemic. It was also trading on this price level. So to me, again, this is a very attractive entry if I were to go into Workday. But they're also reporting earnings on Monday. So again, I'd be interested to see how they do. In the last 4 years, Workday only has missed their earnings once due to the pandemic of May 2020. But other than that, it has also beaten their analysts. So I would be interested to see how they're doing this time around. They also have a current strong buy rating with 9 buys and 0 holds or 0 sells, and a current price target of $314, which is only the average price target, and that is a 40% upside potential from here. Now, the next stock on my list is NIO, which is also an EV maker, and they're also reporting earnings on Monday. Now, I've made a video on NIO before, and I'm still loving this company, even though it has taken a plunge since my initial video. But these prices are offering us really great entry prices if we are planning on holding these stocks for the long term. Just remember, nothing is built in a day and things take time. And similar to Lucid, I'd be interested on selling puts on NIO, and I would also probably go out to sometime in May and I would sell the $20 strike and even collect a nice premium of around $255. So if I then get assigned NEO, my price point would be $17.50, and if I could own NEO at $17.50, I would be a happy camper. NEO also has currently a strong buy rating with 10 buys and an average price target of $56, which gives us 168% upside potential. So that is fantastic. So I'm definitely loving my odds here. Now the next stock on my list is ONEOK, and this company is actually in the oil and gas industry. And I like the stock because they also pay a dividend. And we can see that it have been moving very steadily in the uptrend. And we're currently trading around $64. I'm expecting really good earnings from them on Monday, but we shall see. Now, ONEOK has a hold rating. However, considering that this is a dividend stock, I'd be happy to pick up some shares, especially since they're paying a dividend yield of 6.15, which I think is a great return on your money. If the stock were to plunge on Monday, then I would be happy to pick up some more shares of ONEOK at a cheaper price. And the last stock for today is Blink Charging Company. And I'm really interested in this stock because Biden just announced in February that it will allocate $5 billion to fund EV chargers over the next 5 years. And the plan is called the National EV Infrastructure Formula Program, which is part of the $1 trillion bipartisan infrastructure package that was signed by President Biden last year. With everything going towards EV, I think having a charging station in your portfolio would definitely do you good in the long term if you're holding on 5 to 10 years. And at this price point of $23, I think this is also a really nice pickup. We can see when it first went public, it went all the way up to $64, and now it's currently trading at around $23. So personally, I already own Blink Charge, and I'm looking to adding to my position anytime there's a major dip. And right now we can see that we are just right below the 100-day moving average. So again, I would be watching the stock very closely on Monday, and if it drops more, then I would be adding to my position. As always, this is not financial advice, so please be sure that you guys do your own research on these companies. But if you guys are watching any of these stocks on Monday for the earnings report, I'd be interested to find out which ones you guys are watching. So let me know in the comments below. And if you guys got anything out of this video, please be sure to hit that like button and consider subscribing to my channel. I really appreciate that. And I'll see you guys in my next video. Until then, bye-bye.